PayPal stock is trading under $70. Is it a great deal or a value trap? Every other YouTuber is talking about the low valuation, the deal with OpenAI, but they're missing the biggest risk that could make PayPal go down instead. My investing system, which is up around 52% this year, is designed specifically to spot risk and dangers. So today I will show you every side of PayPal so you can decide if it's the right moment to buy or not. Like always, not financial advice, use your brain, make your decision. Now let's talk PayPal and everything that's important. The stock is down 20% this year, down almost 80% from its all-time high. These horrible returns are why investors are calling it PayPal. I'm very happy I never touched it, but almost every YouTuber is very bullish and they have long positions. Check it out.
I bought 500 shares of PayPal in one of my private portfolios, $10,000 into PayPal, or just over $10,000 more into PayPal essentially. So
PayPal stock is still a buy. The answer is yes. I like the valuation here for PayPal long term.
Highly likely to be the bottom on PayPal, and the stock should be doing well from here.
And this is why this is why I'm excited about PayPal. One, it's of course extremely undervalued.
And that it trades at such a cheap valuation, I'd argue that it warrants the thumbs up.
I really don't care much about what other YouTubers are doing. The things that are really important to me are my value ratio parameters: price, earning power, growth, and especially risk. Now, I could make a 30 minutes long boring video repeating in details the same bullish points as everyone else, but I'm not going to do that. Let's get the standard bull case out of the way in 30 seconds with a quick list of everything we should consider. Alex Chris, the new CEO, is good. I like him better than Dale Schulman. Partnership with the OpenAI, PayPal instant checkout, and agentic commerce in ChatGPT. Buy now, pay later growth. Venmo 20% revenue growth. Interest earned on customers' balances. A new advertising business model and crypto and stablecoin integrations. Braintree's untapped potential. Heavy buybacks as a driver of earning per share growth. A new dividend. Good. 438 million active accounts. Massive. I'm also one of them, but I rarely use it. At this point, just to be fair, I must do a list of the bearish factors. I will keep my main problem that the other YouTubers seems to forget for later. Let's start with the basic bear points. Intense, crazy competition, Stripe, Shopify, Apple Pay, Revolut, Wise. PayPal is maybe even losing market shares. No real growth in active accounts, under 1%. A 5% decline in number of transactions. PayPal is old, they must renovate decades of old code. Buy now, pay later means some credit risk. Now, before I tell you my main concern, we have to admit, looking at the fundamentals, balance sheet, cash flow, income statement, PayPal is really cheap. A price-to-earning ratio of just 13, very low, very unusual in the current market, but growth is nothing special, maybe 5-6% CAGR for the next 5 years. Considering 2-3% of that is just inflation, it's really not that much. But it's so cheap, it doesn't really need to grow in order to be a good investment. It would be enough if they can keep stable and return profits to the shareholder with the buyback and the new dividend, as they are doing. So, if it's so cheap, why I haven't bought it yet? It's because I see two big, huge issues others seems to forget. First, no one, and I say no one, want to pay for transaction fees or payment anymore. Last week, I hired a freelancer in India to help me out designing this thumbnail. He asked me only one thing.
Please don't use PayPal because the commissions are way too high. Use Wise or crypto, please.
Second, I believe decentralization, crypto, blockchain are the future. Adoption is low, but at a certain point in the future, PayPal technology and business model might become obsolete. Are you really sure that 20 years from now, PayPal will still be around? My conclusion is that PayPal business has a very weak moat, a lot of competition with lower fees, so its valuation should be low. As low as $70? Probably not, I don't think so. It's risky, but it's also undervalued. I can see the company bouncing to $90 or $100, but I don't believe it's a great long-term investment that will go back to all-time highs. PayPal price is attractive, and I might even trade it with a target price of $90. But I'm not willing to bet my money that this company will be dominant 10 years from now. I'm holding my cash for a company that is cheap but without these big problems. For example, the entire shoe sector is very cheap right now. But is it a better value than PayPal? Check out this video right here. Thank you for watching. Please comment, like, subscribe. See you next week. Peace out.